Looks like the market's a little bit spooked by what we've seen coming through from that oil price. We had it trading at $116 a barrel just a short while ago. Back at $115, but it really looks like this is starting to spook investors.
Correct, Stephen. We're seeing continued concern that the contagion that is really spreading through the Middle East. We're seeing possible concerns out of Tehran and out of Saudi Arabia, and we're really seeing the oil price running quite hard today.
Now, there's a couple of schools of thought on how that oil price should affect equities, with many saying stimulus in the US will stay there for longer if we do have a high oil price like this. But it looks like some are saying it's going to be hampering growth at this stage.
Correct, Stephen. We saw Bernanke coming out last night raising concerns that the continued high oil prices are going to hamper the development and the growth coming out of the US, and that's really a concern across developed countries. And we're seeing higher inflation figures coming out of the UK. And other countries that are really fueling that concern that we're going to see oil prices higher for longer.
Well, this is really reflecting in the gold price. We had that gold price picking up above $1,430 an ounce, so heading towards those all-time highs hit late last year, and that's benefiting our gold miners, isn't it?
Correct, Stephen. We just saw some news out this morning that there's speculation that Portugal could be really ready for a bailout towards the end of the month, and that really spooking the markets, and we're seeing gold moving higher.
And that gold price, much more room to move at this stage because it has battled to get back to those all-time highs that we saw last year. So do you think we're going to see more upward movement in it?
Stephen, there's been a lot of speculation over the last year that we could see gold at $2,000 US. There is possible upside. I think the global economy is still under pressure with higher employment. We're seeing higher inflation coming through, and the problems are not really being resolved. We're seeing muted growth globally, but with concerns that the higher oil price could be contributing to slower growth going forward. We're going to see gold moving higher. We're obviously expecting gold to come back a little bit on profit taking after its strong run that we've had over the last week, but we are expecting it to reach new highs.
Now, Sasol, which was down sharply yesterday, one of the top 4 gainers on the top 40 today, the other 3 being gold shares. So Sasol up 1.3%. Why would you have expected that pullback yesterday, given the rising oil price at this stage?
Stephen, we expected Sasol to come back purely because it has had a massive run. Last week we saw obviously our rand on a weaker basis, but we are seeing a stronger rand, and that obviously hurts Sasol, but with the oil price steaming far ahead after the pullback we've seen in the Sasol, and the concerns now of the contagion spreading to possibly Saudi Arabia and Iran, it's very likely that we're going to see, and we are seeing it today, Sasol higher on the day, and we're likely to see Sasol continuing to climb.
Quick mention on the banks perhaps, because those banking shares have been under pressure, and that's despite better than expected results out from Nedbank earlier this week. We have Standard Bank reporting tomorrow. Those earnings pretty much known because it has given guidance on a small decline in headline earnings per share.
Correct, Stephen. The banks have been under pressure and continuing on a daily basis. Our concerns around there is when are we going to see the bottom of the banks. Nedbank's results were better than what the market expected. They increased their dividend. We're obviously going to be looking forward to Standard Bank tomorrow with the expectation in terms they have come out with a trading statement to say the results are going to be muted, and obviously there was the news that they're looking to sell their Russia unit, which hasn't happened yet. So we're going to have to look at the details there tomorrow. We still prefer FirstRand within the sector. It has been performing really well in terms of NIR, and it has very low costs in terms of the employees, and they have just really been good. So however, though, the time to buy FirstRand, very cautious at the moment as we're seeing continued pressure. We're also seeing continued pressure in terms of in international banks, and possibly we're just seeing the international banks pulling back over the night, and that could be contributing to our local banks as well.